between Google and Amazon, I'm buying Google. It's a tough call. I want to buy both if I could, but between the two, I think I would buy Google. It's a close call, but for what I think is important, for what I am going for, I'm picking Google over Amazon, and I'll explain why in this video. I'll do my best to keep the numbers and percentages to a minimum, as this is not a deep dive into what is in the Q1 2025 earnings that were recently released by both of the companies, but more of a plain English, a conversation about why I'm buying Google over Amazon. Now, if you want a deep dive into the earnings, I've done that in videos. The details, the numbers, the percentages, the Wall Street expectations, as well as some of the Q&A in a more digestible format than the way the companies have presented. So if you're looking for that, you can check out my other videos here somewhere, where I go full robot finance and dig into the earnings, the reports, the conference calls, like I said, and the analyst Q&As. I also put links to the videos in the description below. Okay, so Google over Amazon. Where do I begin? I think with the pricing action. I like visuals, so let's start there. I think from there, look at the news, see what else is going on with the stock and the world, provide some kind of a backdrop as much as I can. Also look at some of the CEO background, the briefings of their leadership style and what they've done in the past. Then move on to the Q1 earnings report themselves, the conference call, some of the financial pictures of the company. I think that is what I want to do. That's my approach, my thoughts. If you want to jump around and go ahead, I'll mock up the video, so feel free to jump where you want. Also, I'll put timestamps in the description. So first, let me say that I would prefer to buy both the companies, partly because I already own both of the companies, and I've owned them for a very, very long time, and have added to my positions over time. So what I'm saying here in this video when I say I pick Google over Amazon is that these are the reasons why I am adding to my current position in Google over my position in Amazon. But I think this may be useful to anyone considering a new position. But these are just some of the reasons, some of my opinions. So caveat emptor, buyer beware, and make your own decisions. All right, I just wanted to quickly go over some numbers and some percentages. Won't spend too much time on it, but I put this in a quick chart to make comparisons a lot easier. I think Google is on the left here, followed by Amazon, and then S&P as the benchmark. Now, both of these companies posted earnings a few days ago, so Wall Street has had some time to digest the earnings. In theory, I mean read, really, let's be honest, the earnings. So let's go over the chart. Going over the chart, what do you notice first? There's a lot of red, especially Google's side of things, and Amazon barely has any gains. Right here, you'll see that within the year, you'll see 1, 2, 3, 4. So year and less, all red. Year less, you'll see 1 red, but then these gains are, within 2 to 3%. And the S&P has done well over the 1 year. Year to date, not so much, but then these are, of course, outpacing the other companies as well. At the bottom, you'll see PE ratio, that Google is cheaper based on that metric, at least cheaper than both Amazon and the S&P, and the S&P is cheaper than Amazon. And market cap, Google is also a smaller company than Amazon. Okay, let's get away from all this information overload. So what is going on? What is all this saying in plain English without all the red and the black and the numbers and the percentages, with all the painful chart essentially? Well, if you bought Google in the past year or less, then you may be losing money. This is not what I want, but that is the inherent risk with stocks. If you bought Amazon in the past year, you may be up slightly. The S&P would have been the best bet out of those 3 in the same time period, if I were only looking at what was on the chart. But since my investment horizon is much longer, so to speak, than a year, and closer to the 5-year marks, if not even longer than that. Google has done the best, followed by the S&P and then Amazon. For that reason, all the red doesn't really scare me so much. I don't like it, but I'm not jumping to get out of my position anytime soon. So what I have been would I have been better off just investing in the S&P? After all, I mean, it takes the headache out of all the time and the resources of picking the stocks yourself, all the worry. So um, I would have been better off. Well, maybe. I'm not really sure. I mean, hindsight, definitely, I would have been better off. But um, and I admit that buying just the S&P is a solid strategy. And it's proven to be a good strategy over time. In fact, for that very reason, not having to babysit it, the money, while still having solid gains. And I have a lot of money in S&P and in the Dow in my retirement portfolios. Certainly nothing wrong with just putting your money in the S&P. But for me as a long-term investor, I want more. At least I want to try for more. How about that? I want to invest in the future, and that drives my thought process. Where I think the stock is headed, that's what matters to me, and I put my money where my mouth is. Now, this is the part where I tell you that past performance doesn't necessarily mean future performance. Certainly, that is true. Does that mean I am going to ignore the past, only looking at the future? No way. I consider how the stock has performed in the past as one part of the overall consideration. It could mean that the stock has peaked, who knows, at 1.88 trillion and 2.04 trillion market caps. The thought has entered my mind several times, as it feels scary at these levels. Scary not just because it's uncharted territory, but also the risk of the government breaking up the companies. And also, the bigger an organization becomes, the more bureaucratic it is, which leads to lower and lower margins in theory. At any rate, moving away from the pricing action, let's look at some of the news since the earnings were released, or at least the backdrop of what is happening in the context of these earnings. So, Google had a lot more going on than Amazon at the time of its Q1 2025 earnings release. So let's start with Google. On Wednesday of this week, May 7th, Apple, yes, that Apple, announced that they are creating an AI for Safari. This news caused Google stock to tailspin for that day by 11.6%. The reason being that more than half of Google's revenue still comes from search. Over time, Google has diversified to other things such as ads, Google Cloud, and other bets, but search is still the majority of Google's revenue. Today, May 8th, Google bounced up around 2%. So, is this an overreaction? I would say yes. I think there is some of that. Apple hasn't even given a timeline for this AI release, and Apple said that they are, quote, actively looking at, end quote, whatever that means. I don't know about you, but I personally don't use Google search because I have some great brand loyalty. Don't get me wrong, I like the brand, I own the stock, and Google generally makes me happy, and it is my default search. But I use Google search because it gives me the best results. If a better tool comes around, I will certainly use that. Sorry, Google, but not sorry. I mean, I've tried other ones and they generally miss the mark in whatever I'm looking for. Not always, but enough of the time to where I would rather save myself the pain, the energy, and just use Google from the start. Um, I end up frustrated and just go over to Google and it works. Same with Google Maps. I tried Waze, which is still owned by Google, but it is not as good as good for my personal preferences. So I just stick with Google Maps. My point is that just because Apple is talking about looking into an AI search doesn't mean much to me unless they can make a good product, which is very difficult. Now that is not everyone. I know the world is a big place, and maybe some people just care about the logo, the brand. But I think at some level, when you are searching for something, you want what you want. Whatever you're searching for, and that matters. Also, Google's search business doesn't just vanish overnight if Apple adds AI, does it? And who knows the impact, if any, when Apple does release its AI. For that reason, at this time, I'm not giving it too much thought beyond that there may be more competition in the unknown future that I need to be mindful about and pay attention to. Okay, moving on. The week before earnings, sticking with Google, the week before earnings, Google for the second time was found by the U.S. courts to be running an illegal monopoly. The first time was over a year ago and was about Google's search and ads business, and the second time, um, the second loss was about its online advertising marketplace. So first was ads and search, and second is marketplace. So what does all this mean for the stock? Well, courts are deciding what to do. The US government is asking the courts to break up Google. Ouch. Now the government comes out swinging, but Google has proposed ways to avoid the breakup. Maybe the courts will go with the less nuclear option, so to speak. But if Google were broken up, what happens to all my shares? I can tell you that they're not likely to just disappear. Rather, Google will issue me shares of the new company in proportion to what I already own, and the remaining company will have the market cap adjusted accordingly. Not so clean in reality, but you get the general idea. That's not to say the stock won't bleed red for a while. A lot will depend on how the breakup is done, if it happens at all. I don't think I would be. I don't think it would be the end of the company if the company were broken up, so to speak, at this time. I'm okay with that risk because I'm thinking long term. Like I said, I've owned the company for a long time and I don't plan on that changing anytime soon. Moving on to Amazon, it has been a lot less exciting, so to speak. While Amazon hasn't had the level of news swings as Google, Amazon announced a monstrous infrastructure spend on AI in their earnings, which I will get to shortly. In the backdrop of the earnings is also the ongoing trade war, which is having a material impact on the foreign exchange rates for Amazon. Amazon owns the retail side with its website and also the Whole Foods chain. Google may not have the retail side as prominently. It does have Google speakers and a few other things, also the data centers and things like that, but not at the scale of Amazon. Both are in the data center space, so the tariffs are relevant for that consideration. It is happening across the economy to some degree, so at least it is not an isolated situation to these two companies. I'll have to see how it develops. Um, Now I want to look at the two CEOs. Google has Sundar Pichai and Amazon has Andy Jassy. Pichai and Jassy both have very, very impressive educations. Pichai went to IIT, Stanford, and an MBA from Wharton and worked at McKinsey. And Jassy went to Harvard for undergrad and an MBA. All very impressive. But also, honestly, I don't care. Sorry. I'm looking for stock gains. But both have been at the companies for quite some time, have moved up internally. Always a good sign. Prior to being CEO, Pichai worked on a few things: Chrome, Google Drive, Gmail, Maps, Android. And that's what I care about. He knows a lot of different parts of the organization, how things get done. At least from the outside looking in, that's what it looks like. Jassy said that he and Jeff Bezos came up with the idea for AWS, and AWS has been such a driving force, not just for Amazon, but for Google, Microsoft, Oracle, IBM, the list goes on. And then Jassy launched AWS and ran it until he became CEO. Now, the way I read these two is that Bachai was executing and Jassy was building. An oversimplification, certainly, I'll give you that, and maybe not even a fair assessment or oversimplification, but that's what I'm thinking. As far as the driving of the future, what I like, it would appear Jassy has the edge. Not to take anything away from Pichai, because the stock has done really, really well since he started as CEO. However, having ideas doesn't necessarily mean Jassy should be CEO. Now, Pichai became CEO on August the 10th, 2015, and Jassy on July the 5th, 2021. So taking the latter date, otherwise it wouldn't be fair to either one of them, Amazon's price has increased by almost 9.4%, which is not bad. But while at the same time period, Google's price has increased by almost 23%. So 9.4 versus 23. And as a benchmark in the same period, the S&P outpaced both at 30%. That to me speaks volumes. Remember the earlier chart, the one with all the red. Once again, Amazon is behind the S&P in this case. Google is as well, but over the last 5 years, Google, you might remember, has beaten the S&P. Again, the thought comes to my mind, maybe I would have been better off just buying the S&P. But I hold on to that thought and continue. Okay, so changing gears, moving over to the Q1 earnings themselves. I have another chart to make things easier. Now, if you are looking for other similar earnings related content, check out my channel. Other companies I have reviewed include AMD, Meta, and Microsoft. Subscribing to my channel helps me make more videos like this one. Okay, back to the chart. I am going to focus in on just a few key things here from the Q1 earnings of these two companies. Money coming in, which is revenue, the end result, which is the earnings per share, and then the core business profitability and efficiency, which is the operating income. For now, I want to stick to those three. Overall revenue is about the same for Google, slightly higher at 12% versus Amazon's 9%. Revenue is broken down into these core businesses. And you can see that Google Cloud and AWS have impressive growth rates. But the bottom line is that the earnings per share grew year over year 49%, while Amazon's only grew 17%. Both had about the same core business profitability and efficiency. And how can that be if there's such different EPSs, earnings per share, and operating incomes? Because Google's core business was already more profitable and efficient than Amazon's, or at least that's the way I'm reading the numbers. Or remember, this is just growth rates I'm looking at. Moving down the chart, Google does buybacks and pays a dividend. Amazon does not. Now, cash is the story of this chart. Both had declines, which is why it's red and in parentheses, from the amount that they had at the same time the quarter of last year, Q1 of 2024. Google had 4% less, but Amazon had a whopping 48% less cash. So what happened to all that cash? During the conference call, Jassy said that Amazon is planning to invest $100 billion in its build out of its AI infrastructure, which is up from the spend in 2024, which was $83 billion. Now, AWS has more than twice the revenue as Google Cloud, and Google Cloud is also planning on investing $75 billion overall in its capital expenditures in 2025, but said that a large portion will go towards AI infrastructure and data center build out. When an analyst during the conference call asked Jassy about Amazon's ability to capture AI-related revenue, given the market constraints, Jassy said that they are not able to meet customer demand and expect supply chain constraints to ease in the latter half of the year. Another analyst asked about AWS's backlog, and Jassy said that they had a $189 billion backlog, which makes sense for Amazon to be investing heavily in AWS and AI infrastructure build out. But the question is it too much? Similarly, on Google's conference call, an analyst asked a very similar question about Google Cloud's growth and profitability. The CFO said that they exited the year with more Google Cloud demand than they had capacity, and that continued into the current quarter, Q1. So they want to ramp up to support customer needs and demands. To me, that means that these two companies both are hearing and seeing from the money spent that their customers are hungry to have more capacity in data centers and AI infrastructure than that they have currently. And if they build it, the customers will buy it. It is essentially a situation where whoever builds the AI and data infrastructure faster and better will get the customers. maybe not so simple, but overall, I think that's where it's going. So it seems that there is most likely a lot of revenue anticipated for the money being spent on these build outs. I think the data center business in general is an absolute gold mine. Companies have to manage their own data infrastructure on premise is a very costly, and oftentimes it's just not a good idea when a service provider can provide the same kind of service, if not better. Um, and they're at scale, so what they can provide is going to be a lot cheaper. Um, and as more and more companies move away from on premise and move to the cloud, I think the data infrastructure is still lacking from where we are today. And on top of that, add on top the AI use cases, it all makes sense to me that a lot of the revenue on the table for these data center companies is there to be made. Now, while AWS may be larger than Google Cloud also has more room to grow, which translates more for the stock price to gain, and that is what I'm after. But the gains in AWS still um, is still as for any reason why I would want to add to both of my positions if I could. On the other side of Amazon's business, the retail, um, during the conference call, Jassy said that the impact of the tariffs are unclear and are developing. Jassy said that because Amazon uses a lot of third party sellers, the cost of the tariffs may or may not be passed on to the customer. Jassy gave an example that during COVID, price increases were not always passed on to the customer. But during the quarter, Amazon took a massive $1.4 billion hit due to unfavorable year-over-year changes to their foreign exchange rates. The Q2 guidance also had a 10 basis points in unfavorable foreign exchange rates. And on the non-Google cloud of their business, Google, during the conference call, talked about how Waymo is expanding. And this, to me, is the most exciting part of Google. I remember years ago when self-driving was an idea. All these years later, I'm still waiting to take a ride on one of these gadgets. But the conference call, Jassy said that Waymo served over 1 million passenger trips each week, which was up 5 times from the previous year. And of those, 250,000 were fully autonomous paid rides per week. They were in San Francisco, LA, Phoenix, and Austin. And in February, Waymo had 200,000 paid riders. Waymo is launching in Atlanta later this summer, and Washington, D.C. and Miami is planned to go live in 2026. To summarize, first, the pricing action for both Amazon and Google for 1 year or less are terrible. I would have been better off just buying the S&P, but the Google's 5 year does beat the S&P, but Amazon, it never does. Both companies are comparable in size, but Google had news of possible search competition in the future from Apple's AI for Safari that caused its stock to sink 11.6% in a day. But the following day, some of that loss was recovered, pared back. Google also just lost its second antitrust case, the first for search and ads, the second for its advertising marketplace. Certainly a rain cloud that is being worked out. Amazon, on the other hand, announced a massive AI and data center build out. They both have impressive CEOs with great backgrounds, but both companies have not been able to outpace the S&P. Since Jassy has been CEO, Jassy being the CEO that was appointed later in the time, so it's only fair to look at him for the time that he was CEO. Um, Looking at the financials, Google and Amazon have about the same level of growth in revenue and operating income, but Google has a massive gain in its earnings per share. Um, Google also does stock buybacks and pays a dividend. Amazon has 48% less cash than it did the same time last year, while Google only had a 4% less in cash. During the conference call, both companies cited massive AI data center build out. And Amazon cited an additional $189 billion backlog they could rely on. Amazon may or may not have revenue impacted by the tariffs, according to the conference call, because of their reliance on third-party sellers. So that's being, worked out, or developing, excuse me. But Amazon did take a $1.4 billion hit in the quarter for foreign exchange rate, and then they guided for 10 points in unfavorable foreign exchange in the following quarter in Q2. And for the future, Google is expanding Waymo with more and more autonomous rides across America, from San Francisco to LA to Phoenix and Austin, and growth to Atlanta and DC and Miami in the near future. Overall, this leads me to have some concern about Amazon. The spend on Amazon is significant. Having a 48% reduction in cash is concerning, as is the $1.4 billion hit in foreign exchange rates. Retail and grocery is not a business I traditionally invest in, for the simple reason that grocery has a thin margin and retail is a very difficult business to be in. And I just don't have the expertise or the interest in that space, let's be honest, as an investor. I'm in Amazon for AWS. So the foreign exchange hit weighs on me negatively. However, I can understand and appreciate Amazon is hearing and seeing things in AWS that I am not, around their data center and AI build out with a $189 billion backlog. I think there is merit in that consideration. But even with all of the promise for the future, not in one price chart, has Amazon outpaced the S&P. I see the bright future ahead, and I'm willing to keep my position and maybe add a little bit, maybe. That's why I would buy if I could buy both, but it would be a smaller amount. Regarding Google, Apple Safari AI is not concerning to me personally, because it is too early. The antitrust losses, on the other hand, are concerning, but let's see how the courts want to handle the situation. Google Cloud has a lot of room to grow, because it's not as big as AWS or Amazon or Microsoft's Azure. So I think there's room for it to grow. Google is also spending heavily, but its cash position only declined by a small 4% from the same time last year. And then Google has Waymo, and I'm a huge fan, and I think it will transform Google stock. Now, just like Amazon, the S&P has done better, except Google did beat the S&P over the 5-year term. So for me, it makes sense that I added more to my Google position. Tell me in the comments, did you buy more Google over Amazon? Did you buy Amazon over Google? Why? If you're looking for deeper insights into other earnings reports, then check out some of my other videos on the Q1 earnings for Meta, Microsoft, AMD. Thank you so much for watching. I'll see you in the next video.